Yo, family! So yesterday I told you the market was chilling, right? Up 69% for the year, vibes were high. Well, today the market decided to take a little dip. But before you panic and think your investment dreams are over, let me show you what actually happened. This isn't a crash, it's a roller coaster. And understanding the dips is just as important as enjoying the highs. Let's break it down. Welcome to the Investment Nerds, your personal guide to investing in the African stock market. So, the headline for November 6th is, "The market ended lower." The main index, the GSE Composite Index, dropped by 0.66%. Remember, this index is like the class average for all the top stocks. So, the class average went down a bit. But here's the most important thing to notice. Even after this drop, the market is still up 68.31% for the year. Let that sink in. One bad day doesn't ruin a great year. This is what long-term investing is all about. Now, for the day's drama, it was a showdown between two stocks. In one corner, we have the returning champion, CLYD. This tech stock went up another 8.33% in a single day. And its mind-blowing year-to-date gain is now, wait for it, 1,200 per. That means if you had invested GHS 100 at the start of the year, it would be worth GHS 1,300 now. Absolutely wild. In the other corner, we have ETI, EcoBank Transnational. It had a tough day, falling by 9.09%. This one stock's fall was heavy enough to pull the entire banking sector index down by 1.79%. This is a perfect example of why you don't put all your money in one stock. You spread it out. So if one falls, the others can hold you up. Let's talk about cash flow. The company that saw the most money traded was, once again, MTN Ghana. It made up over 60% of all the money moving in the market. This tells us two things. One, it's a very popular and liquid stock, meaning it's easy to buy and sell. Two, even on a down day, big players are still active in strong companies. The word of the day is volatility. Sounds fancy, but it just means how much the market prices go up and down. A day like yesterday, quiet, small move, is low volatility. A day like today, bigger moves, one stock crashing, another flying, is higher volatility. It's not a sign that the market is broken. It's the market breathing. Sometimes it's calm, sometimes it's excited or nervous. So what are the key takeaways from this down day? The trend is your friend. Look at the YTD, year-to-date number, not just the daily change. The overall trend is still massively positive. Diversification is your shield. If you had only invested in ETI, today would hurt. If you had a mix of stocks, like GCB, MTN, and others, the pain would be less. Don't keep all your eggs in one basket. The high trading volume in MTN shows that even on red days, there's still strong belief in solid companies. Inflation is still at 8.0%, and the exchange rate is almost unchanged at $1 to GHS 10.92. These big picture factors are the ocean your investment boat is sailing on. You have to watch them. Seeing a sea of red can be scary, I get it. But now you know what's behind it. It's not magic, it's math, mood, and momentum. Days like this can even be opportunities for some investors. The goal is to stop being a speculator who panics every day and become an investor who looks at the long-term picture. You must do your own research or talk to a licensed investment advisor before putting your money anywhere. All right, I've shown you a green day and a red day. Your turn to talk. Does seeing and understanding a down day like this make the stock market feel less scary for you? Tell me yes or no in the comments and why. Don't forget to smash that like button, share this with a friend who needs to lose their fear, and follow for more simple breakdowns. See you in the next one.